Ladies and gentlemen, good day and welcome to the RITES Q2 FY24 earnings call hosted by Elara Securities Private Limited. As a reminder, all participants will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Malcolm. Good morning, everyone. On behalf of Elara Securities, we welcome you all for the Q2 FY24 and H1 FY24 conference call of RITES Limited. I take this opportunity to welcome the management of RITES represented by Shri Rahul Mittal, Chairman and Managing Director, Shri B.P. Nayak, Director of Finance, Shri A.K. Singh, Director of Projects, and Shri Deepak Tripathi, Director Technical. We will begin the call with a brief overview by the management, followed by Q&A session. I'll now hand over the call to Rahul sir for his opening remark. Over to you, sir.
Morning, everyone. Just a slight correction. My current Director of Finance is Mr. K.G. Agarwal, who took over from 1st August. Mr. Nayak superannuated on 31st July. I go ahead with the opening safe harbor statement. The presentation and the press release which we uploaded on our website yesterday and all discussions during the call today may have some forward-looking statements. These statements consider the environment we see as of today and obviously carry a risk in terms of uncertainty, because of which the actual results could be different, and we do not undertake to update those statements periodically. In my opening comments, a brief overview of the Q2. Satisfying for us, it's been a tough quarter, but the satisfying for us, for the entire team, is that it is in line with the strategy we had envisaged at the beginning of the FY to tackle the twin challenges of revenue from my export stream of business and for the change dynamics in the inspection consultancy stream of business. It was a threefold strategy. One, to give more and more stress on the project consultancy revenue, which has seen a substantial increase both sequentially as well as YOY, as well as getting fresh orders in consultancy. The second was to try and diversify the client base in the inspection stream of business from more and more non-IR clients to minimize the impact of the change dynamics. That also has seen a substantial improvement. Sequentially, there has been a growth in the client base and an increase in the revenue also. And third was to aggressively pursue export opportunities so that the major dent in both top and bottom line from the export stream of revenue that gets mitigated. We are quite happy that we have been declared L1 in 2-3 locations, so a minimum of about 1,500 plus crores, and we are looking forward to them being converted to finite orders in the coming weeks, which we will pursue for generating revenue in the coming quarter. So all in all, a tough quarter, but yes, satisfaction that all three fronts have seen a substantial progress, and we will continue to work in that direction. With those opening comments, I leave the field open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Please limit your questions to one participant. Should you have a follow-up question, we would request you to rejoin the queue. The first question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. My first question is regarding the export business. So in the last quarter, we had two order wins of Zimbabwe 850 crore and Mozambique 500 crore. And recently we have one order in Bangladesh of 900 crore. If you can update on all three of this, that where it is, by when you expect to, sign the agreement and we can start working on these projects, and how much time it will take for the execution.
Morning, Dikshit. So, yes, in terms of all these three, we were declared in the Mozambique tender and the Bangladesh tender, we were declared L1, and the TEC proceedings are on. We are looking forward to them getting fructified as soon as possible in the coming weeks, that they get converted into an LOI. We have not yet added any of these to our order books. When only we get a finite LOA, only then we will add it to our order books. But we are looking forward to them getting converted soon. They are the Bangladesh is for 200 coaches, and Mozambique would be for locos, oblique wagons, or both. So that would depend on what the LOA finally comes, what quantity comes. All these three types have different delivery schedules based on the production cycle, but our efforts would be to at least start generating revenue from them latest by Q1 of the coming FY, and then stabilize it on a steady basis quarter and quarter in the coming FY. So definitely next FY, these orders should generate revenue.
Okay, and update on Zimbabwe?
Yes. So the Zimbabwe one was an agreement signed about 4 months back when the Zimbabwe delegation came here. It was an agreement signed for locomotives and wagons, subject to their funding being approved by their funding agencies. They are still under the process of taking all requisite approvals from their government. We are ready with all necessary steps to be taken as soon as the agreement is signed. Again, we are looking forward for that to get signed in the coming months. But all three of them are progressing parallelly. They could mature, as I said, in the coming weeks and months. Definitely sometime in this quarter.
Okay, I have a question.
Mr. Doshi, I'm sorry to interrupt
Sure.
you, but if you could just join the queue questions because we have other participants. Thank you. The next question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the opportunity. So during this quarter, we've seen issues, or I would say pressure across segments in terms of margins, except for one. So fair to assume this is the new normal, or this is just a one-off?
No, very correct. You see, all my 4 streams of revenue are more and more getting open to the competitive mode. You saw that in the inspection stream from the IR. Consultancy across all my 13 verticals, across all areas of infrastructure, are getting more and more, coming in the competitive mode rather than the nomination mode. While our efforts are still on to get, continue with clients who have been traditionally giving some orders on nomination. However, that's the new normal, as you correctly said, and obviously when you have competitive mode, whether both in the domestic bidding or international bidding, margins are definitely going to be lesser than what traditionally they have been in the pure nomination era. So for sure, moving forward, in all streams of revenue, all my 4 streams of revenue, margins would definitely be under continued stress.
All right. Any number you would like to assign in terms of guidance, say 22 to 24, something?
You see, each of the 4 streams of revenue have wide ranges of margins, right? And you see from turnkey to the consultancy, even within consultancy, they keep varying. So it would not be proper right now. This is evolving over every quarter. The mix is changing between competitive to nomination. I can only say that all efforts are there to secure margin as close as possible to the historic levels, but yes, they'll be continuously under stress.
Got it. Got it. Thanks. I have a couple of questions. I'll join with you. Thank you.
Yeah, sorry. Thank you very much. The next question is from the line of Rohit Natarajan from Antique. Please go ahead.
Thank you. Thank you for this opportunity. Sir, if you could tell me what was the QA number booked in this particular quarter, and what was the kind of margins attributable to that?
You see, I can tell you that QA, if you compare Q2 YOY, we got a dent of about 25 crores. On an average, QA used to be about 90 to 100 crores a quarter. And this took a dent of about 25 crores starting from Q1 this year. However, as I said in my opening comments, the aim was right from last few months to diversify our client base. And that is why Q1 to Q2 saw about a 7% growth in the QA revenue from about 73 crores to about 78 crores. So this is going to continue. Margins are seen in my consultancy overall. So I have been able to balance out the dent in the margins in the competitive mode of QA vis-a-vis getting revenue in higher streams of project consultancy. And we could see an overall consultancy margins of about 40%.
Got it, sir. I will get back into the queue.
Thank you. The next question is from the line of Yash Gupta from ThinkSight Advisory. Please go ahead, sir.
Yeah, hi, good morning, everyone. So, sir, my first question is on the QA itself. So, QA, you are saying that currently we are at 75 crores on the quarter-on-quarter basis. So, what the expectations for the second half of the year? Are we expecting on the same line? And as we are already said that margin, the QA has already dipped. So, we are expecting further dip in the margin in FY25 also?
Yes, you see, very correct, Yash. As I mentioned, average the quarter revenue in QA used to be in the range of 90 to 100 crores. That's been the trend. Last Q2, last FY was about 98 crores. So we are aiming to reach back that levels by diversifying our client base. As you see, the trend is already moving towards that. 73 crores in Q1, 78 crores in Q2. We are aiming to reach back those levels in the coming quarters. It's a tough challenge to come back to those levels, especially since the IR business, now you're one among four, including the reduced rates. So the hit is both in terms of the quantum as well as the rates. So to come back to those levels is going to be a tough challenge in the coming quarters. And as you correctly said, the margins also will be constantly under stress in this stream of business. So our aim is to come back to those levels in the coming quarters. But as you see, the upward swing is already there, 73 to 78, about 7-odd%, and we would continue to aim for that.
So we expect a normal H2 also on the QA business.
Let me not use the word expect. We would say that we aim for coming back in the coming quarters, in the coming few quarters to the levels of revenue of QA that we were in the previous FYs.
Okay, thank you.
Thank you very much. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yes, good morning, sir.
Morning, Viraj. Yes.
Yeah. So my question is regarding QA only. We had some joint venture with some international company. So, can you give some color on that? Like, what is the update? How is going to be planning in future? Any update on that would be helpful.
Yes, in fact, that was an initiative we took a few months back as part of many such initiatives which we are taking. So what we are trying to do in QA is, one, as I said, expand on the client base. So we are trying to get orders from non-IR, both government as well as private clients. Two, we are exploring opportunities in the international QA, which was the reason for partnership with the company. Third, we are trying to also look into areas of application of AI into QA, for which we have recently partnered with IIT Roorkee, a vertical under IIT Roorkee. So all of these are aimed at giving the client another level of QA, increasing the client base, and coming back to the levels of QA which we were even in this changed ecosystem.
Is it going in the right direction? What's your sense? I understand this business takes time, but is it going in the right direction?
Yes, we can say with satisfaction that it's moving in the right direction. You see, coming from 73 in Q1 to 78 in Q2, at least the number of clients have also increased. I see a positive movement in response from a number of new clients, including our ISS certification, which we got, which is giving us a number of new prospective areas of inspection like metros, etc. So we are moving in the right direction. Yes, it's going to be a tough call in the coming quarters till we come back to previous levels of revenue, and then to get those levels, margins, obviously to get those levels of margins would be very tough, but it is getting back those levels of revenue and then substantially building up on the bottom line EBITDA and profits from the QA stream of business.
Yes, sir. That's it from my side. Thank you and all the best, sir, to you.
Thank you, Raj. Thank you.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead, sir.
On the export front, so once we sign the agreement, typically how much time goes into the designing, and when we start, how much time it will take to start recognizing the revenue in the P&L, and margins will be similar of the historic export orders of 24-25%. And lastly, on the export, is there any more large ticket export in the pipeline?
So let me, you asked three questions together. Let me quickly break down into three parts. The first is in terms of the time frame. You see, there are three types of stock which is there in these L1 which we have come: coaches, locomotives, and wagons. Now each one of them, as you can appreciate, have different time frames. The shortest is the wagons, followed by coaches, and then followed by locomotives. So our aim is that in a blended mix between the two, from the time that we get the formal LOA and the agreement, we are aiming that at least in about 6 to 9 months time maximum, we start generating some revenue, maybe from the wagon, which we, as I said, the earliest possible. The second part of the question was that in terms of margin, as you would appreciate, like for example, the Bangladesh L1 which we have come as emerged as L1, that is a competitive global tender open to the entire world.
Mr. Mittal, I'm so sorry to interrupt you, sir. There's a slight breakup. Could you speak at a distance from the mic a little?
Can you hear me now?
Yeah, but it seems like, it keeps cutting off. Like
is it better now?
Mr. Kumari, can you hear him?
Yeah, I can hear.
Oh, I think there's some problem in your line then. You can connect back again.
Can you hear right now? Your voice sounds clear.
Because I think everyone could hear me clearly. The moderator, can you hear me clearly now?
Yeah. Now I can hear you clearly. Go ahead. Sorry to interrupt.
Yeah. So in terms of the second thing about margins which you asked, as you can see, the Bangladesh tender, as I said, was an open global tender on a competitive mode, which is open to all the countries, the suppliers in the world. Vis-a-vis, this is the first in the last so many odd years, maybe 20, 30 years, maybe the first one. Vis-a-vis most of them which are either through the line of credit or a G2G basis. So obviously the margins moving forward where you are competing and trying to get orders in global tenders in a competitive mode cannot be the same level. So definitely margins in the export stream also will be definitely comparatively lesser than what they have been there in the past. In terms of the third part of your question, in terms of big ticket orders anymore, we have been continuously aggressively bidding across the continents, both Southeast Asia and Africa and Latin America. They have started yielding results, as you can see. It would be premature for me to preempt anything, but as soon as we get something, we will definitely declare to the exchanges. But I can only say that a number of opportunities are being bid for literally on a weekly or a monthly basis.
Okay, thank you.
Thank you. The next question is from the line of Rohit Natranjan from Antique. Please go ahead. Rohit, can you hear us? Mr. Rohit Natranjan, I would request you to get back in the queue. We cannot hear you. The next question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the follow-up. So my question pertains to our top line. So assuming, the export orders, as you've been guiding, would be probably 6 months, 9 months down the line. So is it fair to assume, or probably are you confident that we'll be able to meet the last year's numbers as far as the top line is concerned?
Well, as you've seen from the numbers and the mix of the revenue vis-a-vis what it was last year, it's not an apple-to-apple comparison because the mix is totally different. While our aim is to reach back to those levels, the first aim is to reach back to as close to levels of EBITDA and profit to last year, and then obviously parallelly working on reach back to levels of revenue last year. This is a year consolidation and holding on and trying to make as many in all the three fronts which I mentioned at the outset, substantial progress in a quick manner so that we are able to use them and start generating substantial revenue and profits in the coming FY.
Got it. And secondly, sir, in terms of our investments in the ISRDC, any updates there?
Follow-up question next, please.
Sure.
Thank you. The next question is from the line of Yash Gupta from ThinkSight Advisory. Please go ahead.
Yeah, second question was on the consultancy business, sir. So consultancy, we used to do around to be like 300 plus crores of revenue, and in the QA business, we are getting hit of around to be like 25 to 30 crores. So what my question is that what about the other business, the other part, other in the consultancy, other than the QA business, how that particular business performing? Are we expecting like 10 to 12% growth there and margin are stagnant, or there also we are getting some hit in the margin as well as the growth?
You see, in my core streams of revenue, as you correctly pointed out, my core stream of revenue is consultancy. And consultancy both in terms of the revenue, consultancy includes the inspection fee also, both in terms of revenue, which saw 20% growth YOY and a 10% growth sequentially. There is a substantial growth both in the project consultancy revenue as well as the QA revenue sequentially, which you saw. So you could see an overall growth in the consultancy revenue of about 5% YOY. And if you take the project consultancy, which is a substantial portion of the consultancy, that, as I said, saw 20% growth YOY and a 10% growth sequentially. So the key factor is that consultancy, which is our core strength, is substantially growing, not only in terms of revenue realization, but in terms of getting fresh orders also. So this quarter, we have got about 78 orders, which is on an upward trend from about 70 in Q1, which is currently at the rate of 0.85 orders a day. And the way we are progressing, we are aiming for a milestone of reaching one order a day in the coming quarters. So consultancy is progressing well. I've already explained to you about the prospects in Expotech. Leasing is another about 5% of my pie, which is substantially growing. Margins have been healthy. So that's got a steady growth. Turnkey is our limited area, which we are not really a construction company, but we've got an order book of 2,500 crores, and turnkey revenue would keep on being maintained at a steady level. These are very low margins, and this is not primarily our main line of business.
Sir, in the project consultancy, as you told that 20%, so the margins are constant there, or there is some pressure in margin there also?
No, so because the mix from inputs, because of the inspection, as I said, have taken a hit on the margin. And even within project consultancy, as I said at the outset, because of more and more competitive bidding, certain sectors are definitely in consultancy, project consultancy also are under strain. So maintaining margins at the historical level, whether it is for inspection standalone or consultancy overall, which includes project consultancy, is always going to be a tough call. However, we have still been able to maintain overall consultancy margins at about 40%. which is going to be a tough call, but we are aiming to be as close as possible to the historical margins moving forward.
Okay. Thank you, sir. Thank you. A small suggestion toward the moderator. If you can allow 2 questions per participant, it will be much easier for us.
I would request you if you could, because we have a lot of participants in the queue, if you could join the queue back, then we will definitely, management will definitely answer your question. Okay, thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Participants, please limit your question to 1 question per participant because we have other participants in the queue. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks a lot for taking my question. My question is on the margins. I think you did highlight that there will be stress on the margins in this particular year. But in this quarter, if you look at, there has been a weakness in margin in consultancy as well as there is a loss at export level, at EBIT level, at turnkey also there has been a decline. So in all 3, you expect the same kind of trajectory going ahead, or probably there is one-offs in turnkey and export in this quarter?
No, as I said, in all 4 streams, and for the reasons I said, as I said for export tech, because now it is more and more of competitive global tenders which we are aggressively bidding, lesser contribution from erstwhile LOC type G2G contracts because those are much lesser. Now more and more are on competitive bidding on global tenders. So export margins will definitely not be at the same levels historically. Consultancy, since inspection itself is a part of the consultancy revenue, and for the reasons explained, as well as project consultancy, some of the sectors in project consultancy with more and more being open up to competitive bidding will definitely also see a stress in margins. Turnkey by nature itself are in the range of about 2-3%, which on a steady basis, on an annual basis, will even out in about 2-3%. So maybe a quarter here and there sees a fluctuation in the turnkey margin, but on an overall basis, as the project, the milestones get achieved in construction, they will steady out on an average about 2-3%. Leasing is a good business, about 5%. We are trying to expand the client base also leasing, so that even moving forward, some margins do take a hit. In leasing, we would aim for getting more revenue and more profits in leasing, so that the historical levels are maintained. But overall, yes, in terms of the overall core EBITDA, blended core EBITDA for the entire company, for all the reasons in all 4 streams of revenue that I explained, definitely maintaining margins to the level that they were is always going to be tough in moving forward.
Okay. So basically then it's a basically change in the guidance earlier, like, revenue growth will be flattish, margin improvement will be there. So there's a change in the guidance in that front. Profitable growth, so that at least in FY24, it looks challenging. FY25, whenever the export moves up, then only the traction could come. That's broadly one can summarize, right, sir?
No, let me not say that there's any change in guidance. This year started with the same 2 challenges and the strategy of trying to hold on and maintain levels of revenue and EBITDA to last FY. And that is what our aims are going to be, that we moving forward in the coming 2 quarters, we, even with the stress on margins because of the mixed blend, both inspection and export are high margin contributors to the overall pie. So definitely margins comparable to last year will be tough, but the aim of trying to reach the levels of revenue and EBITDA or PAT at last FY, that aim will always still be there for this FY. It's a year of holding on and consolidating, and next FY growth in both the top and bottom line, with even the stress on margin.
Even the stress on the margin in FY25.
Mr. Periwal, sorry to interrupt you. I would please request you to please join the queue since we have more participants for more questions. If you could please join the queue back again. Thank you. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yes, sir. Thanks for the follow-up. I wanted a color on RMCL. How are things progressing there, and what are your feelings about it?
Thank you for asking that. In fact, RMCL is actually to our happiness and satisfaction moving forward aggressively. The revenue has grown substantially. If you compare YOY Q2, both revenue and profit, a growth of about 17% in revenue, a growth of about 16% in PAT. It is for successively for quarters now. It is paying dividend to both the RITES and IR. It has paid the highest ever dividend this quarter Q2 also, about 100% of its profit, 99% plus of its profit it is distributing as dividend. So RMCL is moving forward very aggressively, both in terms of its traditional line of business as well as the net zero mission of Indian Railways. It already finalized the first tender of RTC a few months back, and it's on the path of processing other similar RTC tenders in the coming quarters.
So is it fair to assume it will grow at double-digit margins, double-digit revenues? I mean, high double-digit revenues?
It will grow at a steady pace because the electrification is increasing, the traffic is increasing in IR, so it will grow at a steady pace. It's obviously garnering all possible growth that is happening in IR, both in electrification as well as traffic. However, after a certain stage coming forward, we'll review depending on when a certain entire level of electrification is reached. By that time, definitely there'll be a substantial growth.
Okay. Thank you, sir. That's it. Thank you, sir. Thank you.
Okay.
Thank you. Before we take the next participant, a gentle reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead, sir.
Good afternoon, sir.
Good afternoon, Parimal. Yes.
I just wanted to know, sir, RMCL last year, we had almost 95 crores in revenue and 45 crores in PAT. And currently, we almost come to 79 crores and 42 crores in PAT, sir. And this is just for the existing, electrification using. Do you think we can surpass the last year's revenue in this current year itself, sir, with the same margins?
Yes, for sure. We are already moving in that direction. As you're correctly saying, the figures compared to last year have been a substantial growth. And even, as I said, the Q2 YOY has seen a 16-17% growth both in revenue and profit. So with the increase in electrification and the traffic growth in IR, we are on path for definitely exceeding last year's revenue as well as profits in RMCL.
And sir, this is not for a dedicated freight corridor yet, right? The revenue from that is included in this RMCL or not yet, sir?
Your voice went. I'm sorry, I can't hear you.
The dedicated freight corridor, do we do any part in the RMCL as of right now, sir?
No, not for the dedicated freight corridor, to my mind. We are only IR is a client right now.
Okay, sir. Okay, sir. Thank you.
Thank you. The next question is from the line of Sampath Nayak from Tiger Set. Please go ahead.
Hi, sir. Thanks for the opportunity. My question is on the margin side again. So,
your voice kindly be a little louder, Sampath.
Yes,
Mr. Sampath Nayak, your voice is not audible. Could you speak? I would request you to speak from the headset. You're not audible to us.
yeah, am I audible now?
Yeah, now you're audible right now. Go ahead, sorry.
Yeah. So all our future projects will be on competitive basis, right? So bidding will be on competitive basis, right?
I mean, it's unfair to use the word all. I can only say that the trend is moving towards more and more competitive bidding across all streams of revenue. That's the trend now, and that is across sectors.
Right. And do we? Can you give a ballpark number on the sustainable EBITDA margins going ahead?
So as I said, it's not fair for me to give a number considering it's an evolving situation. There are four streams of revenue. The fact has remained that the margins across all streams of revenue, for the reasons that I explained some time back, are definitely going to be difficult to maintain at the historical level. But yes, they are the dip or the variations in the margins in each of the four streams will be different. Overall, also on a blended mix, the margins maintaining at the previous levels is going to be a tough call.
Okay, sir. Thank you and all the best.
Thank you. The next question is from the line of Rohit Natranjan from Antique. Please go ahead.
Thank you for this follow-up. Sir, I see that you are doing a lot of collaboration with state-owned entities like PFC, IRFC. What is the scope of adding up consultancy order inflows through that kind of collaboration? Can we assume, like for instance, PFC, if it makes incrementally a loan of 1 lakh crore, is it possible that 1,000 crore could possibly come as a consultancy revenue for or potential pie for RITES? Could you elaborate on those aspects?
You see, not only IRFC and PFC, we are very aggressively trying to collaborate and partner across various sectors with our goal of trying to be a 1 order a day company. We have already reached about 0.85 order a day in Q2, and moving forward, we feel that 1 order a day is reachable in the coming quarters. Specifically, an IRFC and PFC type of collaboration, it is more for projects or infrastructure projects which they plan to invest, as they are both diversifying from their core sectors like power and IR. They are diversifying into other sectors also. So they want to use our experience of doing due diligence for their various investment opportunities which they plan to invest in. So these are the initial days where collaboration started. I mean, as they grow and as they invest more in varied sectors, depending on the scope of work for each consultancy that we get from them, I see a good opportunity of getting orders from both of them.
Sir, if you, just to follow up on that, the conversion of this 1 order a day in terms of ticket size, what would that number look like?
So you see, consultancy is a wide range. You could have an order of 50 lakhs, you could have an order of about 30-40 crores, depending on which portion of the value chain that you enter in. So it's very difficult to give you a number of 1 order. You can have the historical trend which will give you an order and an average. For example, 78 orders we got in Q2 this year, totaling to about 329 crores. So these are the average consultancy range of orders that we get.
Sure, sir. Thank you. That's it from my side.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Shikha Doshi from Axis Securities. Please go ahead.
Thank you. Good morning, all. I wanted to know, could you give a guidance on the capex for this year?
Yes, morning, Shikha. So we are a low capex company. We really don't have a, our average capex has been in the range of about 150 crores traditionally. This quarter, we did a capex of 28 crores, bringing the cumulative to H1 to 63 crores. And we would be ending up somewhere around about 125, 150 crores. That's the historical trend that we have. We are moving forward also. We're not going to be a major capex company. We range in that about 100 or maybe less.
Oh, okay, sir. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Mehul from Nuvama Wealth. Please go ahead.
Thanks for the opportunity. Good morning, team. Observing a dividend payout ratio over last decade, there has been increase substantial from 20% to about nearing 100% now. So is there, if I look at business segments, is there's not that significant change over the period. So how should we look at what is driving that
You see, I'm glad you asked this question. It is a reiteration of our core business strength moving forward without any lack of clarity that we are a consultancy company. We are not a construction company. We are not an infrastructure capex company. With that clarity, long-term clarity in our core business vision and our core business strategy, once we are very clear and there's a reconfirmation and reiteration of that, we don't see any reason of holding back on dividend, and that is why we are plowing back the earnings that we get to our stakeholders, and that's why you are seeing a steady the dividend payout ratio of 90 to 93%.
Thank you.
Thank you. The next question is from Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi. Good morning, sir. Just a question from my side on the export front. So we have already seen these 3 orders probably you'll be getting in a few weeks and months time. But beyond that also, do you still see a reasonable amount of pipeline which you could be working on? Because if I remember from last year onwards, we have been saying that every year you will see some orders which will be coming up. So beyond these 3, is there a pipeline that you would be looking at, or probably there could be some amount of lumpiness again, which has been the case earlier?
Morning, Harshit. I'm glad you asked this question because again, this is a reconfirmation of our strategy which we started last year itself post-COVID as the world was opening up to reach out aggressively to all possible clients across the 3 continents, whether it is Africa, Southeast Asia or Latin America. And we did not rely purely only on G2G or line of credit type of tenders. We are now bidding, as you see from a live example of this Bangladesh coaches tender. This is a EIB funded tender. And so we are now bidding aggressively, literally on a week or a month basis, not only in LOC, G2G type contracts, but global tenders of export. So with that, this to my mind is just the beginning, and our aim will be not to see any lumpiness, the kind that we saw leading to this being some challenging quarters for us in terms of export tech revenue. So our aim is that we have enough orders coming on a regular basis in export tech so that the contribution from this stabilizes over a period of time in the coming quarters on a steady basis.
Understood, sir. I'll join the team.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. We will give it a moment for the question queue to assemble. The next question is again from Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, so just a question on the turnkey construction. We saw a decline by 6% in this quarter. Now, was that because of normally Q2 is generally a weak quarter because of monsoon, so infra activities are slow, or is it because some of the projects have not reached that threshold level, hence you are not able to book the revenue portion? If you can give us some sense on that.
Yes, there was a slight dip in the revenue and turnkey in this quarter. Not a very major substantial reason for it, except that we still have an order book of 2,500 crores and various projects are at various stages. So it's a question of some reaching some particular stages in their completion and booking of the revenue. So moving forward, normally, traditionally, Q3, Q4, things pick up more in construction contracts, and I see this trend going forward in the turnkey stream of revenue in Q3, Q4 to increase substantially as these projects progress at a faster pace.
Understood, sir. Good luck, and I'll join the queue for more questions. Thank you.
Thank you. The next question is from Rohit Natranjan from Antique. Please go ahead.
Yeah, this is just a follow-up on the IRSDC investment, which will probably get now transferred to RLDA. Your investments are 48 crore. I see that you have mentioned you don't see any impairment risk in that business. But could you clarify as in what are the future plans or RLDA has? Would there be a further equity participation in future projects for RLDAs where the company will allocate some capital to these particular segments?
See, Rohit, it's not fair for me to comment on RLDS plans. I can only say that our investment is, as I've been saying earlier, it is safe and it's in the process of being wound up, and the necessary processes are being leading to a logical conclusion timely. We are pursuing it, watching it very closely. We don't expect any hit or impact at all, and that's what we can. I'll limit my comments to.
Sure, I appreciate that. Thank you.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for taking my question. Now, I think you did mention that as the competition is increasing and then how the P&L changes could happen. From a balance sheet point of view, does this differ? That is, will there be increase in the working capital requirement or things like that you can provide a color?
No, not really, Vishal. Our model traditionally, as you've seen, our working capital requirements are very minimal. We are a debt-free company also. So this change of mode of awarding contracts is not really going to change the working capital requirements moving forward.
Sure, sir. That's all from my side. Thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead, sir.
Hi, sir. Good morning. So the first half has seen a degrowth in terms of top line, consolidated level. So do you think by the year end you'll be able to make up and at least reach FY23 levels, or that seems tough from the revenue front?
Yes, Rahil. As I mentioned some time back, that's our aim, even with two major contributors being not there compared to last FY. And even if these few export opportunities fructify into finite contract agreements in the coming weeks, as you saw from my detailed explanation regarding the time frame for export revenues, the earliest that we could expect revenue would be Q1 in the next FY. So yes, coming back to levels of FY23 is going to be a challenge, but having said that, our efforts are on to compensate or minimize the impact by as much possible by the growth in the project consultancy wing, which, as I mentioned, this quarter also saw a 20% growth YOY compared to Q2. So with that, we are trying to compensate levels of reaching back both in terms of bottom line and top line comparable to last FY.
Okay, got it. So then, from that perspective, FY25 should see a substantial growth overall.
Yes, for sure.
Any ballpark percentage you can attach to it right now, or it seems difficult?
Not fair right now to preempt, but you see the direction in which we are moving. Even with two streams of revenue having taken a hit, if we are able to touch back the base of FY23 and with these orders generated, Expotech generating revenue in Q1 onwards, we definitely would like to see a substantial growth both in top and bottom line vis-a-vis this base level.
Okay, sir. Got it. All the best. Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead, sir.
Yeah, thanks for the opportunity again. So just on the clarification, what we are hearing is that there has been some amount of ordering deceleration or at the railways with the run-up to election. Is it are you able to also see the similar thing for your turnkey construction projects as well, sir?
So I don't see, we are still getting a lot of consultancy. I mean, we are bidding primarily for consultancy works for IR. Recently itself, we have got a lot of works in consultancy, which is our core strength. 2 sections we got for semi-high speed surveys and consultancy for DPRs. We have got some orders for development of rail sidings, consultancy, final location surveys. So we are continuously getting orders, and I don't see any slowdown in that at all.
What about the turnkey part, sir? On the consultancy you clarified. How about turnkey? Is there something also?
We are bidding very limited. As I said, turnkey is not really our main source of revenue. We still have about 2,500 crores as our order book. We would like to limit it to very limited strategic opportunities, not only in the railway sector, but certain buildings or some metro construction or some, these are the three broad areas: station development, which we have been getting few construction orders in turnkey. So we don't see any major slowdown in that. Wherever we feel to balance our optimum turnkey requirements, by phasing it out, we are bidding and getting some orders in turnkey business also.
Understood, sir. Wishing you all the best. Thank you.
Thank you very much. As we have no further questions, I now hand over the conference to Mr. Harshit Kapadia for closing comments. Please go ahead.
Yeah. Thank you, Malcolm. We would like to thank Shri Rahul Mittal, Chairman and Managing Director, Shri A.K. Singh, Director Projects, Shri A.G. Agarwal, Director Finance, and Shri Deepak Tripathi, Director Technical, for giving us an opportunity to host this call. And we also thank all investors and analysts for joining for this call. Any closing remark, Rahul, sir?
Thank you, Harshit, and thank you to all my stakeholders who have the confidence in us. And as explained, we are on the track for the consolidating our position. We see progress in all the three areas which we have strategized as our way forward for this FY. All three fronts, as I explained, are moving in the right trend if you see sequentially also. With that and our recent being accorded the Navratna status few weeks back, which is a feather in our cap in our 50th year as we reach 50 years in April, and the fact that we are currently at 0.85 order per day, aiming to be a 1 order a day company, I see interesting quarters moving forward. Thank you very much.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.